Hey guys, what's going on? Hope y'all are doing well. I'm so excited to share this with you guys today. This is Smart Money Concepts episode 4. So get your juice, get your tea, get your coffee, whatever gets you going. Let's get started and let's break down these pairs. All right, so as you all know, or you should know, we trade smart money concepts. All right, trading with the institutions, trading with the banks, whatever may have you, trading alongside them. Okay, not with the rest of the herd, not with the retail traders. The retail traders get stopped out. We look for those clues that the market makers give us, and then we take advantage of them. All right. So now we base our whole strategy not just on smart money concepts, but also on structure as well. So what I'm going to first start by doing, I do have 5 pairs that I'm going to go over: Cad Jpy, Euro GBP, Gbp Cad, Euro NZD, and Chef JPY. Now these pairs range from 4 or 5 months ago to present day. I just kind of skimmed through our Wick entries highlights on our Instagram. So if you haven't checked that out, please check that out. It's awesome, great content. Shows you all the possible entries you could have had on any of those pairs at any given time. So check that out. So I just kind of scrolled through those and picked a few of them, and I'm going to go over with these pairs with you guys today. So Euro GBP, I want to first start off by doing a top-down analysis on this pair. Okay, Euro GBP, it absolutely looks gorgeous. So just hang in with me, all right? Soak in as much information as you can, take good notes, and let's get rolling. So I'm going to start with the monthly time frame, as you should when you're going top down. Okay, so what can we pick out on a monthly time frame level? Well, we need to pick our supply and demand zones. We need to pick our liquidity zones, our equal lows, equal highs. What needs to be taken out? What has already been taken out? Where is the overall direction the market is going? Okay, so in the monthly time frame, I don't really suggest looking much further back than any of this in here, because this really doesn't matter. These were years and years ago, decades ago. But it can be helpful in determining long term where price may go. All right, so I first saw that we had this sort of demand level here, this last selling volume before the uprise. Okay, and we never came down and tested that. We never even tested that as support. All right, we actually created equal lows here. Okay, we had an expansionary move, we had an overall pullback, which took a couple years. Then we had another expansionary move. Okay, so we are in a bullish trend. Now, I'm not saying that we're going to come all the way back down here and test this demand. I'll go over, potentially the reason for that, and maybe if we can find a short sell into this level. But we are still in a bullish market. So next, I want to go over this liquidity zone in here. We had equal highs, we had equal lows. Equal highs were run, and we had a massive reaction from that. You can see by the wick in here. Okay, we pushed up a little bit more. I'm guessing to test something in here. Actually, it is test something in here. I'm going to go over that in a minute. The next objective should be to take out this equal low. All right, these equal lows in here, liquidity. If we're going to go higher and much higher, we probably should take this out. Now we got to step down to the weekly time frame. And we should still be looking for buys, even though we do have equal lows here. Okay, we still have this demand, this last indecision selling candle before the up move. We could come back down into here, and we can see that we have more equal lows here. Could come back down into here and then rise, because what do we have? On the monthly time frame, we have that monthly 50 EMA as well approaching. Okay, so if we can sustain, go back to the weekly. If we can sustain above this sort of level, we're not going to come and test this. Okay, we're most likely going to come and take these highs in here. Okay, but if we end up closing below this, so closing at 0.8685-ish, something in and around that level, then we will come and attack these lows here. So that will be the next objective. So still looking for buys in this region, but right now we are shorting off. The next objective will be these equal lows. Okay, so we're looking for buys here. If we break this level, we're going to be coming lower, taking out these equal lows in here. All right, so now let me just scroll down to kind of what I had down here. So we do have equal lows. I already talked about that. We have that demand. So if we end up coming all the way back down, breaking these equal lows, and even breaking really this last demand in here on the higher time frame, this last selling orders before the big buy up, then we can be confident that we are going to come back down and test this demand level here. So that is thousands and thousands of pips away, but it is a possibility. But we're still looking for buys. We still are in an uptrend. So we do have to take into consideration that. I actually don't know why I have this box here, as a matter of fact, but let me just zoom in and see what I can find. I think it had to do with a schematic. Actually, it did. Okay, yeah, we did. Okay, so we had that selling climax secondary test, the spring here. You can see if I zoom in that this last selling volume right in here was mitigated with that wick. Okay, then we had an expansionary move to the upside, bing, closing above previous market structure here, here, and here. Okay, then we fell. Now, where is our next point of call? Now that we have broken the counter trend, I'm just going to get rid of all this. Now that we have broken the counter trend, meaning all of these, lower low, lower high, all the way down, we finally broke it to the upside, closed above this level. Now we should be looking for longs. Now, I'm not saying the long end up here. Obviously, we don't want to be doing that, but we could be looking for discounted pricing to then long it. So where is our next zone? I think this is why I have it drawn here. It happens to be right in here. This imbalance fill, anywhere in this sort of last demand level, right in here, that mitigated this last selling volume. Okay, so could have taken a long straight from that. Don't take trades from the daily time frame or weekly time frame at all, but if you did, you could have had 50 pip stop, and then all the way back up here if you were to have held, and I know this is far-fetched, but I'm going to go over it. We could have caught potentially, I don't know, 2,500 pips. So you can see the risk to reward there. But I'm not a swing trader. I'm more of an intraday, intra-week trader. But that's the potential that Forex can provide, as long as you find the right setups with confluences that go along with it. Okay, so I guess that's why I have that there, and then we ended up expanding to the upside, continuing. Okay, so that is Euro GBP in a nutshell on the higher time frames. Okay, so now we should be focusing on what is going on lower time frames. So now that we understand that we should be coming in here and looking for longs, doesn't mean that we have to wait. We can be looking for shorts in here. And before I go over that, let me go back to the monthly because I did forget something. If we do end up breaking this level here and attacking these lows, where could we potentially stop? Maybe not, down here. Maybe we won't come all the way down here because we're still in a bullish market. We don't really want to be taking out prior lows because we're making higher highs, higher lows. But where could we come into? Well, I see this zone of pricing here. Now, this is the monthly time frame, but this is just a generalized zone right in here. Okay, you have support, 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 kind of turn resistance here for a little bit and then broke, and we have a lot of imbalance within this candle here. We never came down, tested it as support again before rising. So if this is going to be the draw on liquidity, if we break this, well, that will be the draw on liquidity. But if we do break that and take these lows, coming back down into sort of this demand level here, this last selling order volume in here before the big rise, to take care of these orders and then rise. And look, it could be just a massive inverse head and shoulders. Okay, break of structure. This is the higher time frame structure. We finally broke it with this, ended up pushing a little bit higher up into here. Could see an overall pullback and then a continuation. All right, so that is the higher time frame. That could take absolutely so long to come into fruition, years. But it's okay to be doing this type of analysis, because as long as you're following higher time frame direction, you can take counter trend moves on the lower time frames. But if you understand the overall direction of the market, you're going to be good to go long term. All right, so let me scale into the 4-hour time frame here. So what is going on? I know we have these equal lows, this demand level that we're looking for. So this will be our overall target. Okay, so what do we do in here? Well, actually, let me go into this region here first. And I'm going to go to the 8-hour. 8-hour, now you would not be looking for sells straight off this level. Okay, you know why? Well, because we're so bullish. How did we know we were going to fall? We didn't. So we had to wait. So that, I guess that is why price came up into this level, is to mitigate these buys. So we should be focusing on this wick here. Where should we be coming into? And if you scale to the 4-hour, I just drew this big zone here. The price with this last buying volume before the big sell-off after the mitigation occurred. Okay, and we can clearly see that over to the right, we came up swiftly into that and had a rejection and fell. So mitigation has occurred. We probably should not come back above this high right now in the short term. So we were making lower lows, lower highs. Okay, we are now bearish. All right. we have equal highs in here. We had equal highs in here that was run with these two wicks. Now these two wicks are going to be the next focal point after the new lower low is formed. Just basic structure, guys. All right, it's not hard. Lower low. Okay, we were expecting, it was within this leg for price to come up and take this high here and mitigate something in here. Didn't do it. Kept falling. Enticing short traders, which is fine because what do we have here? And you could have taken a short from right in here, that supply level. You could have taken a short from this supply level. All right, so there are many opportunities to take shorts. All right, but overall, we needed to come back up and test what was going on in here. Okay, that was the overall higher time frame supply level because we had that overall break and purge of liquidity. So we need to come back up and take that before the heavy fall, which we see. Okay, we do have falls in here, but they're not as heavy as this. Why is this more heavy? Why do we absolutely die? Because, and I'm sorry I'm speaking fast, there's just a lot of information. But why did we fall so fast, so quickly? Well, because we finally took all this liquidity here, mitigated what we needed to mitigate, and now we can move in the correct direction. All right, so getting rid of this, shorts are on the table. Where could we be looking for shorting opportunities? Well, we do have, I do like the EMAs. They can be an additional confluence, but never trade them solely, meaning don't just wait for price to come back up into the EMA and then short it. Okay, use it as with confluence surrounding your setup. So what I'm thinking is anywhere really in here between this open of price, this buy before the sell, and I know this is the 4-hour time frame, and I know this would be a pretty decent sized stop loss. So if you want to scale into this, you can, but we have to understand this is a higher time frame leg pull back, so we may only experience 50, 60, 1% somewhere in this region. Okay, we do have imbalance right in here that could be filled. All right, so a pullback sort of back up into that level would be nice. Okay, so that would be for an overall short opportunity. As you can see, we closed below counter trend. You can see higher high, higher low, higher high, closed below it, lower low. So now we are bearish. Even though we were bearish higher time frame here, we're now bearish lower time frame. So we just need that lower time frame trend to the upside to mitigate, to fill in balance, and then we can continue with the overall direction. All right, hope that makes sense. Again, if you have any questions, please feel free to DM us, let us know. All right, so that is Euro GBP. Hope you guys learned a lot from this part. Now I'm going to be going on to the setups that our VIP members took over the course of the past few months. All right, so I want to first start off with Euro NZD. Now you have to bear with me here. I'm going to have to find where this is. I think it was right in here somewhere. Yeah, I think it was right in here. Okay, cool. So I kind of want to break down what's going on, sort of in this region of price. All right, we are in a downtrend here. Overall, yeah, we're in an uptrend, fine. But this is the 4-hour time frame. We can still continue lower. We have a lot of imbalance to fill, as you can see, low resistance here. Okay, so what did we do with this push to the upside? Well, we took liquidity. All right, we took this liquidity. I'm guessing we mitigated something within that wick. It's probably exactly why we came there. We had a massive fall. Where's the counter trend? Right in here. Higher high, higher low, higher high, higher low, higher high, lower low. Close below that region. All right, so if I just delete all this stuff here, I will highlight that region for you, and we can clearly see the zone of price. Okay, resistance, turn support, 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 turn back resistance. Okay, so when we finally broke this level, we should be looking for shorts. Okay, we understood that that was a high probability, not only because this 4-hour 50 EMA is being capped by price, which is also a good confluence, but because we swept liquidity here. Broke counter trend structure, we're now bearish, we should be making a new low. Okay, so scaling in, and this happened to be on the 30-minute time frame. You could have actually had 2 entries here, to be quite honest, probably 3. Maybe found something within this wick here to mitigate. All right, so let me get rid of this. Your first entry could have been here, this imbalance fill. Bang, to the T. All right, last supply before the fall, mitigation, continuation. All right, now, why did I want price to come back up into this level here? This last buy before the sell. And why did it make it all the way back up here? Well, This was the candle that filled in the balance. All right. We also have equal lows down in here. So that is an additional confluence for price to push lower because that is the next objective. So lower low, lower high. Now we're making series of lower lows for this overall push to the downside. Okay, so you got in here, you got in here. So that's two potential entries. We didn't send this one out. We did send this one out, and we made a good amount of money off of that. Go check the wick entries highlights on our IG. It is Ariel__FX. That's our IG. It's a double underscore. Go check that out, and you can see that along the way there. All right, so let me just play this out. Continue to go lower. And actually, before I continue with that, where are going to be our profit targets? Well, you could have had one. Let's do this. Stop loss, we'll just make it 18 pips. Don't remember exactly what it was. First target will be -27. That's a 1 to 8.41. -61. It's a 1 to 11. All right, so let's see this play out. And we swiftly hit take profit. After a while. But anyways, we hit take profit. We knew it was going short. That was the trade. Just following structure, and having confluence surrounding your trades, finding liquidity, all right, waiting for counter trends to break. In this case, there was no counter trend, except for the higher time frame counter trend right here that we broke. But on a lower time frame, it's just following the lower time frame trend here. We confirm that we're bearish. All right, mitigation. Let me get rid of all this. Mitigation occurred here. We can confidently take a sell. All right. So that is Euro NZD. If you have any questions, as always, please feel free to ask. Next one I want to discuss with you guys is Gbp Cad. Now again, I'm going to have to go over and find it. The trade occurred right in here, I believe. Yes. Okay. The trade occurred right in here. Great. Let's go to a lower time frame. Let's kind of get rid of this. Perfect. Right in here. Okay. So understanding that we are in a bearish trend here, short-term bearish trend, it is okay to still be looking for longs if the counter trend has been broken. Have we broke the counter trend in here? No, we have not. We have not. We have not. We finally did right in here. Okay, so we had a fall to the downside. Within this, we had lower lows, lower highs. We finally broke it with this push. All right, what did we have? Well, we had these equal lows in here on a lower time frame. I'm not going to scale in for time purposes, but equal lows all in here were swept with this candle. Sell to buy. Guess what time that occurred? 3:30 a.m. Eastern Standard Time. London session open. London session gap period. Perfect manipulative push. Break to the upside. BOS. Break of structure. Pull back. Discounted regions of price. Let's pull the fib. See 78.6. Where would your entry be? Right at the open. Sponsor candle. Bing. What do we have? 3 pips drawdown. Cool. Easy, easy, easy peasy. All right. So I mean, I can't make this up, guys. It happens all the time. You just got to be able to train your eyes and find it. Find liquidity. Find the breaks of structure. Find the mitigations. Clearly see liquidity here, liquidity down there. All right. Get rid of that. Now, where will our targets be? Well, probably within here. Since we are still technically bearish, we shouldn't be looking for higher time frame targets. So maybe just -27, -61. So I'll take a long position from here. Make this like 14 pips. -27 to 1 to 5.3. -61. It's about a little over a 1 to 7. So you would have made a 7% increase on your account in a matter of 14 hours. Not even a day. 7%. All right. So not trading every day is very beneficial. Looking for your proper setups, because over time the setups and the trades will accumulate and the percentages will accumulate. If you are a quality over quantity trader, you know what I'm talking about. All right, so that was Gbp Cad. That was a trade we took. We sent it to the members. A little bit of drawdown, about 3 pips. Not to worry. We made 7%. Perfect. All right, next one. Chef JPY. Chef JPY. All right. So Chef JPY is not our typical smart money setup. I mean, it is, but it isn't. All right, it has to do with smart money, but it's more along the lines of a schematic. All right, schematics, Wyckoff schematics. I'm sure most of you guys have heard of this. If you haven't, we just released a course video. We updated the course with an additional video explaining all about Wyckoff. So if you are interested in that, please check that out. All right, so right in here, what do we know for sure? Well, let's just kind of break down what's going on in here. All right, we are overall bullish. As you can see, this is just a retracement, and now we're looking for that expansionary move to the upside to make a higher high. Now, if we are to go short, if we happen to go short, we probably have to come back up into sort of this region, which we did. We ended up doing that. All right, this last supply, these last buy orders, is this distribution, and then we fell. Okay, so coming up and testing that if we are to go short, which I don't expect, but if we do, then that would be the region of price. So that would be one of your targets. So now we understand that price is making one drive, pull back, two drive, pull back, looking for that third drive. Three drive cycle. All right, that's how the market moves. All right, so now I understood that we had equal lows right in here. Now I wanted price to come a little bit lower into this sort of region. We never got that. We had a little bit of a breaker, and then we had a breaker to the upside. All right, so after this closure, my bias shifted. No longer was I looking at that level, and I scaled in. All right, and it happened to be, and this is just absolutely gorgeous, guys. This happened just a few days ago, actually. I think last week. Yeah, last week, end of last week. Equal lows in here. Sell to buy, 4 in the morning, market session or London session gap, break to the upside. Okay. Selling climax, secondary test with these lows in here, spring, BOS, test, mitigation to the T, basically. All right, so we would have had max 4, maybe 5 pips of drawdown, but to be safe here, well, where we have put stop loss, well, right in here, right below the body closure here, 15 pips. Take profit. You could have just targeted the lower boundary of the supply level, which would have given you a 1 to 8.5. But I still think this can go long, as we are in discounted pricing now. I'm not sure if we're going to come sort of back down into sort of this demand level here that originally mitigated this demand, but it could potentially happen. Why do I think it could happen? Well, because on a lower time frame, there is a schematic play that we broke to the upside here, breaking structure. So we could experience a slight pullback and then a continuation. All right, but that's besides the point. All right, where is our overall take profit if we had have entered right here? Well, let's understand the structure, the higher time frame structure. Knowing that we swept liquidity higher time frame and we broke structure counter trend higher time frame, we are good for a higher time frame push. Pull our fib from the previous low to the high up here. First take profit 116.8, second take profit probably 117.5. So that in and of itself is 11.5, 1 to 11.5 risk reward. If it comes all the way back up here, it'd be about a 1 to 16. So let's just say that this wick in here hit that negative 27, hit our take profit. That would have taken all of a little over a day. 1 day to hit 11.5% is pretty damn good, if you ask me. All right, so that was a schematic play with a mitigation along with it. So again, if you have any questions, please let us know. The last one I want to go over with you guys today is Cad Jpy. Now this was a trade that we took today, actually. The members took this today. I want to break this down for you. All right, so higher time frame, we're bullish. Higher high, higher low. We're looking for that higher high to take out these equal highs right up in here. All right, we also have more equal highs right in here that the market left. You can see that this high here never broke this high. So these are equal highs, liquidity resting above this. we're making higher highs, higher lows here, so we should just be looking for buys. If you had taken a look at oil, oil is very, very correlative with the CAD because Canada is a major exporter and manufacturer of oil, so it is tied together. All right, so oil has been going up. We can expect CAD strength, obviously Cad Jpy, buys, you get what I mean, right? So why did we have this fall all the way back down into here? Well, I'm guessing a lot of people were buying. Obviously, we can see this push. Taking liquidity, I'm guessing, in here, which we ended up doing. Why did we stop right there? Well, 4-hour time frame imbalance fill to the T. Scaling in. Why did we have this push this morning? Well, these lows, this liquidity, there's liquidity resting below each low and above each high. Okay, so we swept this liquidity here. We scale in again. We can see here, look, schematic, again, just like Chef Jpy. Selling climax, secondary test, more lows in here, these equal lows. We fell, sell to buy, break of structure, come back, mitigate perfectly. Okay, perfectly, right on that 30-minute candle. Again, 3 o'clock in the morning, London session gap period. All right, so these are exactly, the proper confluences that you need for each and every trade. If you have those, you have the highest probability chance of winning because you are trading alongside the banks and institutions. All right, so let's just mark up our risk to reward here. And time and price, we talk a lot about that in our other YouTube videos, Smart Money Concepts 1 through 3, because this is the 4th one, and we do talk about it in further depth in our advanced course. Our advanced course, and really all of our courses, all of our services are currently on promo right now. We are having our biggest promo we've ever had. So if you guys are interested in getting in on that, massive discounts, I think over 50% discount on basically everything. So if you are interested in that, please let us know. We'll be happy to set you up with that. All right, but the course is very extensive, goes over a lot in depth, step by step, exactly how we trade. Now these are just kind of hindsight examples showing you guys what we mean, what you should be looking for. But to understand and train your eye and see this for yourself, our course definitely has helped a lot of people. We had nothing but good reviews, so thank you guys so much. We appreciate it. All right, so let me just mark up the risk to reward on this, just to show you. Long position. Could have had a 5 pip stop. We had a little bit bigger stop because I think we entered somewhere in here and not exactly here, but that would have been probably the best entry right in there. 5 pip stop. Where's our take profit? Well, we do have equal highs here, so that will be the objective. But just in case this momentum fall, is valid and we end up pulling back, retracing, and then continuing down, then we should be looking at where is the next possible supply zone. Next possible supply zone pretty much is right in here. Oops. All right, just about right in there, around 79.92. That was our first take profit there. We can see support. We have this last buying volume in here before the sell-off. All right, this is just about a 1 to 9, a little over a 1 to 9. Overall take profit is 80.6, just about right in there, and that's a 1 to 22.7. So guys, percentages are what makes you money. Pips don't make you money. And if you know anything about Forex, you already know that. Pips don't make you money. Because I could have a 500 pip take profit, 100 pip stop loss. That's a 1 to 5 risk to reward. I gained 5% of my account. But I could also have a 10 pip stop loss and a 50 pip take profit. That's still a 1 to 5. So how long did it take me to hit 50 pips? How long did it take me to hit 500? It took me to hit 50 a lot sooner, a lot quicker. And I want my money sooner than later. There you go. All right, I'm not telling you to zoom in to lower time frames. I mean, you can do that. But understanding risk to reward and how this works, minimizing your risk as much as possible, maximizing your reward as much as possible. Finding those big risk to reward setups allows just a couple trades for you. I mean, even if this hits 80.6, you just gain 22.5% on your account, just like that. All right, in a matter of maybe a few days, maybe a week or two. All right, depending on how fast we move up, if we move up past this level. All right, so that is all I have for you guys today. Thank you so much for watching. Give a thumbs up, like, comment, subscribe. Hope you all enjoyed this. Have a great rest of your day. That is all Smart Money Concepts for. Hope you liked it. Appreciate you guys.